Hi, I'm Rick Albert, and welcome to The Key to the City of Angels, the podcast where we unlock the secrets of Los Angeles real estate. With over 300 real estate deals under my belt, I've seen it all, from house hacking strategies that build wealth to helping clients close multi-million-dollar deals in one of the most competitive markets in the world. Every week, I'll bring you expert insights, market trends, and inspiring success stories to help you navigate the LA real estate scene. Whether you're a first-time buyer, an investor, or just curious about what it takes to thrive in the City of Angels, this podcast is your guide to making smarter decisions and achieving your goals. So grab your keys. It's time to unlock your path to prosperity in Los Angeles real estate. Hello, everyone. Rick Albert here with another episode of The Key to the City of Angels. I'm super excited to have Robert Feldman of Wow's Insurance. Thank you for coming on the show.
Thank you, Rick. I appreciate getting the information out right now is really important. So thank you for having me on.
Yeah, absolutely. And what I'm really excited about is you're based in SoCal, right?
Yes, that's correct.
So I've talked to other insurance people, but they're like, oh, I'm on the East Coast. And I'm like, it's always different when you're here and you're seeing it firsthand.
Yeah,
Especially with how complicated. For
Yeah.
sure.
It's easier for me also because we're in 10 Western states and
Okay.
as a wholesaler, so it's neat when I can actually do something in my home court, meaning like in my backyard is my
Right.
term. So definitely better.
Yeah.
Definitely
So
better.
let's start off with, how did you get into insurance?
27 years.
Okay.
So 27 years, my father-in-law was a senior executive for an insurance company, dragged me into it. I was an insurance broker to start with. And over the last really coming up on 2.5 years, became what's called an MGA or wholesaler. So
Okay.
we appoint insurance brokers for our insurance programs. And we are constantly looking to fix. Obviously right now, Rick, is when everyone out there listening right now knows the insurance market isn't exactly great. We're bringing a lot of solutions to what's going on at this time. So
let's talk about the elephant in the room. Like, we all know what the issues are with insurance. And a lot of people think the insurance are the bad guys. I'm one of the few people, I'm like, are they? Or is this the cost of construction go up, the numbers don't work? Like, you can't really be mad at the insurance company for that, especially when we live in a state where it limits how much you can increase.
Exactly. What happens really is two things that really nailed the insurance companies.
Mm-hmm.
And I can talk about it at great length. And look, I believe, to your point, I don't think insurance companies are as bad as people think. I don't know if they're as good as people think. I think it's more of a middle. Okay. Insurance companies are like anything else. They're a business. They just are. And everyone fails to think. They think that a lot of times people have the perception that insurance companies should just write insurance. That's just as you in real estate, you should do things pro bono and sell houses, or CPAs should do tax returns for free. All of their stuff. You can't, it's just doesn't part of it. But the two major reasons that really nailed insurance companies really are interesting. One is proximity of risk. And that's two-tiered. So one is houses were built years and years ago, and they're stacked on top of each other. So there's not a lot of fire hardening. That's a word we'll talk about at great length of what's going to be the next generation of insurance and the solutions that we're bringing in right now to fix. So fire hardening is a really big part of this. Two, at the same time, is proximity of houses to each other. So let's say, Rick, for example, I work with reinsurance companies. We have what's called a line slip coming in. A line slip is a capacity from London, Lloyd's of London and different things. We're bringing in roughly 2,000 homes for the 10 Western states, which is really, if you think about it, a drop in the bucket. It's really more like a drop in the ocean, is my joke. But with that said, we keep continuing to bring obviously capacity in and work and wholesaling for different ones. Insurance brokers are appointed with us. The problem is when you look at the actual numbers, when you get into number crunching, okay, of what a cost of insurance is, there's the oversaturation, as I talk proximity of risks. If you have a house on a street and you and I are an insurance company and we write that house, so a lot of people go, why don't you write the other houses on my street? When you do that from a quantitative standpoint, especially when you're towards the fire zones, it's not 1 + 1 = 2. It's 1 + 1 = 3. 2 + 1 = 5. 3 + 1 = 9. You're watching the numbers and the cost of insurance rise exponentially as you oversaturate the market. So that was one of the things that absolutely was destroying insurance companies, is that you would have a State Farm or Farmers or Allstate or somebody that would write, they have permission to write into an area, they write oversaturate themselves to market. And so there was no diversification or spread of risk. They have an oversaturation. They have 20% of a given area, and they have other areas, they have 1%. You can't do that. If you do that, you are putting insurance companies in harm's way. I've said many times, I've been on podcasts, great ones such as yours. I've been on credit rating ones like AM Best. I've done Bloomberg, and we were talking about insurance. And really, that's the number one thing that's really hammering insurance companies. The second one is really what we just talked about, fire hardening. I'm sorry to say, we have a lot of bad situations right now still going on across California, such as, all this is on CAL FIRE's website, by the way. It's called Lean, Clean, and Green. And really what this is, it's really leaning into the next generation of insurance that we're building right now. And we've brought to market. You need to have things like your 0 to 5 feet zone, meaning if you were the 5 feet within your house, around your house, has to have non-combustible plants. You have to have succulents or things that are just non-combustible. We see people all the time with hedges and eucalyptus trees and palm trees. These are all things that are just fire bombs, basically, that when they catch fire, they wipe out houses. And why it's important to know this is people go, I'm not in a fire zone. A lot of people don't realize that due to the wind patterns, what's called a SHIA report, ambers can carry 3 miles. So people go, Robert, I'm miles away from hillsides. If you have the strong Santa Ana winds and what we have our fire zones, what does in California, you could have fires that ambers could carry miles and take out houses.
Wasn't the issue in Altadena? There was homes that weren't in the high fire zone. They were actually at the base.
Yes,
and they were catching fire
because of the wind patterns. So being fire hardened, closing off. So here's the real simple thing that I talk to all consumers. Everybody that's listening right now, and for you as an agent, really this is going to become the key thing. We're doing incredible things. Our programs, we have my WOW's program for high value homes. We have 2 other insurance programs, one of which is our line slip, that's going to make homes fully transferable from sellers to buyers. So it's going to eliminate the fluctuation in the market. Doesn't mean that a consumer buying a house has to take the insurance. What it means is that it's there. So you have to take out the stability, take out the flexibility of what's going on, or the wobbling of the market. The second thing is really about the fire hardening. I'm just saying this now, as you, Rick, have heard it at great length, and everyone listening right now, poor Rick has heard it ad nauseum, all the stuff about fire hardening from me. And just really for everyone out there needs to realize this is what's going to be the next thing. You can't have open exposed eaves. You have to have your vents closed in your attics or vents around the house with 16-inch mesh to protect from ambers. The scary thing about that alone, Rick, is having just those things with the 0 to 5 feet. The IBHS, which is the Insurance Institute, estimates that you are 73% more likely to survive a fire. Just having that. And when you go to Altadena, and using that example, or even the Palisades, the ones that were fire hardened are the ones that survived the fires. It was the older houses that didn't have the fire hardening, that didn't have the updated windows and things of that nature, that didn't survive the fires. So with that being said, if you and I and everyone out there, we're all together and we're an insurance company, we're putting our money at risk, which house are you insuring? A house that's fire hardened, that has all the updates and things of that nature, or are you doing the ones that are without?
Yeah. I've noticed over the last couple of years, we're getting more questions from insurance companies, even just in general. How old are the systems, or can I take photos of all around the property?
Yep. That's Fair Plan. It's required.
Yeah.
It's required.
Yeah. Because
no
one can say it doesn't happen to them anymore. Because that's really the big thing.
Yeah, exactly. And so again, what I always talked about, everybody, when I'm in the middle, when I talk about insurance companies, is insurance companies are businesses. If they don't make profit, if the reinsurance companies that support insurance companies are losing money, 2 things happen. They stop writing business, meaning they pull out, or they raise rates to the point of where they can be profitable. That's why you're seeing the rates skyrocketing right now, and everyone out there seeing it. It's because of the fact that the state of California, and by the way, there are other states that we deal with that are having same struggles and problems.
Sure.
I think one of the greatest states when it comes to the Department of Insurance is the state of Nevada. I was on with them this morning. They're very aggressively looking to fix things. The state of Nevada is. They're taking a really aggressive stance. They actually even split wildfire off as its own peril. So just like how we did that with earthquake, okay, where earthquake gets its own coverage, they're splitting that off. That gives the opportunity for someone like us or me to work with London and Lloyd's of London and reinsurance companies around the world to build programs for Nevada to split that very thing off. California has a law that says you cannot do that. Fire is fire, whether it's a kitchen fire or wildfire. So it gets a little trickier.
Do you think insurance companies, they go where the money is? It's a business. Do you think that are there conversations of like State Farm pulled out, now they're maybe coming back, we'll see. But do insurance companies actually even want to be here? Or is it more of they have to be here? What kind of conversations are happening?
So right now what's happening is obviously a lot of the admitted carriers, basically the state of California doesn't really have an admitted carrier at this moment. Farmers is very limited. There's a very few admitted carriers. And for those out there, let me explain what admitted and non-admitted is.
Yeah, that'd be great.
An admitted carrier is your traditional State Farm Farmers All-State AAA, okay? As an example, State Farm is completely in retreat. Allstate has not written an admitted product in probably 10 years. Farmers has a cap of the number they will write per month. But like companies like Travelers and Safeco and Liberty Mutual are all non-renewing and pulling back right now, okay? All the names are really pulling back. The state of California is now, we're bringing in some of the non-admitted space. The difference really between admitted and non-admitted space is the non-admitted space, the admitted space falls under what's called the Guaranteed Association Act. Mm-hmm. But really it's a little misleading, because a lot of consumers go, an admitted carrier falls under the Department of Insurance and it's under the Guarantee Act. When they read the fine print, what the Guaranteed Act guarantees is $250,000. So you have consumers that will have $2 million rebuilds and $3 and $4 million total insurance values. If that insurance company goes bankrupt, the only guarantee is $250,000.
It's like the bank, FDIC.
It's same thing. It's a very good analogy. And so what happens is we do bring in a lot of the non-admitted that are A+. We have one that's A++ rated. It's through Munich Re, which is the largest reinsurance company in the world. They're aggressive in the market right now, writing place. At this moment, I believe the state's really in the non-admitted space. There are sections, obviously. I use the example in Southern California, if you're in the middle of Reseda, and the state Reseda is nowhere near brush, it's nowhere near a wind pattern, there's going to be carriers that are going to write those houses. But for the majority of California and 9 other states, it's a challenge right now. It really is. It's a challenge. And we keep jumping in and really looking to solve that. I a lot of times think, Rick, I feel like the kid that's putting his finger in the dam. I bring in something and I go like this and plug the hole and I watch holes blow sit right past me.
Yeah.
On these things, some of the announcements. Berkshire Hathaway is a large non-admitted carrier. A company's called AZ Guard. They're non-renewing now. Great. I bring in a line slip and I bring in all these things, and it's basically barely going to cover what AZ Guard's going to cancel. So we're not gaining ground, is what I would say.
Yeah.
We are winning the fight. The fire hardening has definitely helped. It's a solution. This is the thing that everyone gets out. As you heard me talk about, Rick, and I say it many times, you're going to be talking to, I feel bad for everybody out there that's in the real estate space, because we've had to almost bring them into my world. Oh, yeah. Is my comment. And it's because I always make a joke when you hear me speak at different events. I always joke with all the realtors and go, by the way, how many of you get paid for opening escrow? And I go like this. And usually I catch someone not paying attention and raising their hand. Obviously, in the real estate space, nothing happens until if you fall out escrow, doesn't matter. Yeah. And so, what a lot of consumers can push back on is, I don't want to take out the rose bushes that are 5 feet from my house or the eucalyptus tree. What we're seeing now, Rick, I hate to say it, is we're seeing those houses going in and out of escrow and in and out of escrow and price reductions. Because if insurance companies can't write it, how do you close an escrow?
It's funny, because I also buy rental properties out of state. And on some of the past transactions, what I've been doing for negotiations is I'll enter escrow, we do our inspections. But oftentimes sellers are very difficult. I already gave you a price reduction. I don't want to give you more money. Yeah. So now what I've been doing is saying, look, I reviewed the home inspection report. I know we agree that we take it as is. The problem is insurance is going to call all these things out.
Yep, that's exactly a good point.
And they
Because
give me
again,
and they give me what I want because they know
yep,
that it's a problem. It's gonna come up.
it's going to be a problem. It's going to come up, and the fire hardening is the most important thing. So, can I ask you, Rick, as a question? I'll interview you, the little part of it.
Go for it.
What's the typical range of homes you sell when you represent sellers?
Usually between 1 to 2 million.
Got it. Okay, so let's use that example: $1 to $2 million. Fire hardening reports are anywhere between $500 to $1,500. That's to have a
Right.
fire hardening company come out. So
Mm-hmm.
let's say, for example, just saying this, if you get a fire hardening report for $1,000 or $1,500 for your $2 million house, and you don't have to take a 10% reduction or 5% reduction, isn't that the best money you've ever spent,
Yeah.
that consumer's ever spent, to make sure that? And okay, so not just the $1,000 or $1,500, but they then go through and mitigate and update all things. Maybe it's 10,000 total or 15,000 total to do these things. Is that still better than a $2 million house taking a 5% reduction? Last time I checked, that's $100,000.
Yeah. What we're seeing oftentimes now, and we're actually working on it in our office, is you usually have to get some sort of report or clearance from the county, but you basically can determine who deals with it. So does the seller deal with it before we close, or do the buyers deal with it after the close? The
Yep.
problem that I personally have is we don't usually get those disclosures till once we're in escrow. And I'm like, this should be a
Yeah.
negotiation item.
And I think what happens is, I think a lot of people it's one of those things where a lot of people are really now trying to make it's a battle back and forth.
Yeah.
I look at sellers, I do a lot of consulting for agents such as yourself and things like that. I look at consumers and go, you can do what you want, but going in and out of escrow is not going to be Rick's fault. It's not going to be Rick's fault. And so my argument is, and this has become such a major issue, such a major problem for insurance, that I don't get it. I look at everybody and go, take the bogey out of this, take the problem out of this. Think about a fully transferable policy, or think about it even just being fire hardened and being correct. We know that we have a carrier. If you have that, what have you just solved? If in most cases we're talking a lot of money still. 10,000 is not anything to say about. 20,000 depends on what it is. I'm not saying that's not money, but in the grand scheme of things, whether it's $1 million or a $2 million sale or anywhere in between, it's a major difference not having this. Think about how easy the whole transaction is. If you have what the county requires for fire right now is basically a nothing. It's really, I'd almost say, entry level fire hardening. That doesn't work with the insurance companies. So doing a full fire hardening report, doing all the things that are suggested on there to get this thing done, basically what you've done now is a certification. I have yet to see a fire department say it's not compliant, okay, first of all, with the fire hardening. And second of all, being able to turn that into an insurance broker that brings it to us, showing that it's fully fire hardened, now gives us options and things that we've never even, it's like we have a company which we think is incredible, American Western. They're all about fire hardening. If American Western says yes, we had a house in Calabasas that was a $2.4 million rebuild according to State Farm. State Farm was getting off the risk. Okay, they're canceling. Their last policy renewal was $19,000. That was a huge increase for them. Okay, the company American Western is writing it for $3.2 million in coverage, higher coverage, same deductibles, same great things. But because this client had completely fire hardened their house, the rate was $6,800.
Wow.
I mean, that's a huge difference. It just makes sense.
Yeah, it's all about de-risking for them because they're fronting the money, just like in almost any other industry, lending, whatever. You have bad credit. You're going to prove you can't pay. Why would I give you money?
Thank you. Or it's going to cost you, to your point. I like that. I'm going to steal that from you, Rick.
Go for it.
If you have a situation and a person has bad credit, what are they paying? They're not getting the traditional rate. They might pay 2 or 3% or 4% more.
Because the risk is.
So if you think about it, fire hardening is the same kind of idea.
Yeah.
We had a big home, which we were kind of laughing up in Saratoga. The client was holding on, loved these 2 palm trees that were within 8 feet of the house. Okay. We were $60,000 cheaper, $62,000 to be exact. And we're on with the head of underwriting. That happens a lot of times with the bigger homes, and we're going back and forth. And I finally stopped the client. And her name was Jane. I said, Jane, got to ask you a quick question. Is $62,000, do you love those palm trees so much that you're willing to pay $62,000 more a year? If the answer is yes, You should continue who you have and write with it. This company is willing to do this based on fire hardening. That's a game changer.
Question for you. I remember showing a property to a client. It was not in a high fire zone, but there was a tree right between the two properties, which we all know is a problem because the branches come over and all that. But it was an oak tree.
So actually, believe it or not, it depends on where you are, first of all. Okay. But generally, as a rule, oaks are protected. The fire department actually mandates there's a 6-foot clearance from the roof or any roof lines. So what that does is that gives the homeowner the ability to clear it away from their roof. So you can get it. And I have to admit, I say, Rick, when I come back in the next life, I want to be right now, like in the Thousand Oaks area where we live, that kind of stuff in Ventura County. There's only 3 arborists that are allowed to touch an oak tree. Shoot, we're in the wrong business, Rick.
No kidding.
I want to be the 4th on this end of it, okay? You want to talk about something terrible, talk about license to print money. You're one of 3 people for all of Ventura County that can touch a tree? The oak trees? We're in the wrong business, is my joke.
For sure.
Wrong business.
Yeah. So let's hop into the kind of the luxury market, because that's actually been probably hit the hardest. Just by virtue of the homes are bigger, higher end finishes, like the cost of rebuild so much more.
Bingo. And what happens is, I'm going to clear a bunch of myths out right now. Okay,
let's do it.
Everybody that's listening. Okay, a lot of people believe that rebuild costs aren't soaring. I can give you internal numbers that you can't see. Most consumers do not see. I get access to this through different insurance companies because I'm an MGA wholesaler. Okay. The Palisades fire right now, everyone goes, okay, that's Palisades is expensive area. Okay, let's go to the Eaton fire. Okay. Eaton fire is in Altadena. For those that don't know where that is, that's a middle income area, very traditional area. Okay. And what happens is, when you're talking about it, it's definitely the situation where it's scary. You're seeing right now, minimum 600 a square foot to rebuild. Minimum.
Yeah.
Okay. That's Altadena. In Palisades, we're seeing over 1,000. And so we're seeing areas now as much as $1,500 to $2,000 a square foot on the higher end homes. When you have that situation, Rick, that's what's pushing it out, because there's a lot of carriers. California Fair Plan, as we talk about, has a maximum coverage of 3 million. Okay. So at least if you fit in that criteria, you can get insurance. It guarantees. And what's interesting is a lot of the insurance carriers are $2 million on structure or less. So if they're $2 million in structure or less, once you hit that 3 million mark, it's like falling off the edge of a cliff. Well, based on what we're talking about, what do you do if you're even a 4,000 or 5,000 square foot house, and you're 4,000 square foot house and you're at 800 a square foot? That's a $3.2 million dwelling. Yeah. Now you're above the Cal Fair Plan of these things. This is the challenges. That's why when we launched all our stuff, we've been doing the high value and working our way down. Is really to defend, because at least when we're wholesaling other options, we have the options to help consumers.
And I think part of the challenge with specifically Altadena is, when these homes were built in 1900, they had a lot of character to it.
Yeah.
The running joke was, like, on the west side, you see a lot of these, they're called modern boxes. Let's call it what it is.
Cookie cutter. That's
but they were just like
companies in trouble.
That's
because like you and I know, I always say it wrong. Is the alphabet streets? Am I saying that right?
Yeah.
The Palisades letters, alphabet street. I think a joke, Rick. You and I could have had a sprint contest. Got on top of one roof and ran rooftop to rooftop without touching the ground. Just jumping really 4 or 5 feet across on a carry sprint. And we probably would make it and probably run a half a block or a block before one of us fell. Okay. You can't have homes like that. Insurance companies, when one goes, it's a domino effect. That's why insurance companies are shying away from it. And so it becomes a lot different thing.
Yeah.
But again, rebuilds are challenging.
And that was part of the problem, is like some of these homes had such detail to them that it's actually much more expensive. That's when you are starting to get to the $600, $700, $800 a square foot. Even $1,000 a square foot. Yeah.
Some of the wings. Now, an A-frame typical built house obviously is going to be up towards the $500 or $600 a square foot. But the more, and what's happening for a lot of consumers, I'm sorry to say this, and this is what I feel bad about, right, is the integrity of areas, right? You had all those great things in Altadena. Now what people are putting back is, because they only can afford an A-frame simple, what you're doing is you're losing the integrity of areas.
That was, so word on the street in Palisades was some high-end realtors were working with some architects to basically create like 5 different models. And the idea was to push it through the city faster.
Yep.
But the sacrifice then is you lose the character of the neighborhoods.
Yep.
So, because I love the Palisades.
It becomes cookie cutter.
Yeah. And so you're paying for the good weather. Like,
yes, you are.
At that point.
That's it.
So people are asking, like, what's the home values are going to be after all this stuff is built? And I'm like, it's going to be tough to say. On one hand, you have new construction, great location. Mm-hmm. But on the other hand, you don't have a lot of those characters unless the specific owners actually spend the extra time to do it.
Exactly. And what's really killing a lot of the problems in housing, people talk about different issues and problems.
Sure.
One of the big problems is there's enforcement of spread of risk. So what happens is right now, if let's say you and I owned a house in the Alphabet Street and we only had a 5-foot separation setback, they're saying, no, it's got to be 15 or 20 feet. How do you do this? Now, you're letting people build up. So you're going to have a 500 square foot because you have to shrink it, but you have your total of 1,500 square feet because you're building it 3 stories.
Yeah.
I don't know, Rick. It's going to get, and a lot of developers have caused the issues. You'll see it throughout California and different states. Obviously, if you and I were developing a piece of land in Palmdale, Lancaster, man, we want to rapid fire these things. Yeah. We want people, you want those things as tight as you can get them and get them allowed and have very close setbacks and things. That works in a non-fire, non-combustible area. Yeah. You can't do that in the Palisades. You can't do that in Altadena. You just can't.
To your point, I wonder if they're I actually know contractors and architects who are building out there, so I should probably ask them. My hunch is that for the higher ones, they're going to build down.
Yes, they'll build down.
For the one level basement, which could be 1,800 square feet. I've heard of that. And then do the 2 stories.
Stories above, exactly. There's all kinds of things that they're doing right now to be able to think. I feel terrible. I know people don't like to say that. Think about it this way. I feel terrible for the ones that burn the houses burned on PCH. And the reason for it is they were all put together with septic tanks and things that were grandfathered in. They're gone.
Yeah.
That
gone. Was one of the big issues.
So now you can't, you spent $20 million for a house on PCH and you can't even rebuild because you can't even connect to the sewer system and you can't put a septic system in.
Yeah, that was one of the big concerns is because over the last 10-ish years, they've been restricting how much you can build, like in terms of size. It used to be half the lot size. Now it's 40% plus a design bonus. So these people who had these larger homes, they're like, now I've lost value.
Yes.
Because they're smaller homes.
Yes. And there's the problem with that also at the same time is there's no way to compensate. So people ask, if I lose value, do I get insurance relief? The answer is no.
Yeah.
Because technically you're paid to rebuild, meaning you're supposed to submit plans to rebuild. So let's say you had an 8,000 square foot house and the lot only lets you build 4,500 and you submit for 4,500 and that rebuild cost is 1,000 a square foot. It's $4 million. So if you have that, it's a situation where you have to be a little trickier.
Yeah. So then, bringing it back to insurance, what's likely to happen in areas like the Palisades or Eden Fires is now you have new construction, so they most likely meet the fire hardening.
That's a great thing, by the way. That's a real, like when I talk to London and in Bermuda for the company, the things in Germany and bringing reinsurance for line slips, we're getting a lot of traction because I hate to sound terrible. They look up and go, ooh, it's going to have tempered glass windows and we're not going to have the brush within 0 to 5 because that's now required by state law. You have the 0 to 5, you have to submit plans. All the fire hardening things, that's a state law right now, Rick.
Yeah.
They're enforcing it on new homes, but what they're not doing is they're not enforcing it on the existing homes. They're almost waiting for insurance companies, because there's not enough people to enforce this.
Sure.
And so what they're allowing is really the insurance companies to enforce everything.
Look, I own some of my rentals, they'll do inspections, right? The insurance companies, and they'll say, hey, here's a long punch list.
Yep.
Some of it's legitimate. Some of it I definitely would question, but do you need insurance or not?
And that's the whole thing is, and I get into this I hate to sound very dry about the analytics of it.
Yeah.
But if I look at you and if you and I again own the insurance company and we're putting our money at risk and you look at 2 houses side by side and house number 1 does all the fire hardening, does everything it needs to do and is 73% less likely to burn versus the house that has done nothing. What are we investing in? Investing on the house we're insuring the one that's got, this is the direction everyone listening right now needs to hear. This is what I joke, you've heard me say it in meetings and things like that. If you're not talking about fire hardening as part of your listing presentation, I think the mistake in the real estate world, and I talk about this with agents such as yourself, this needs to be, a lot of consumers will talk to you about bringing things to market, listing their houses. But it takes time. I don't have, today's a Wednesday for those listening, whenever anyone's listening. It's not like someone's coming up and saying to you today, hey, can you have me on the MLS by Friday? I want to be open for this weekend. There's a lot of steps that go there. The ones that I believe that are successful, such as yourself as a real estate professional, are now talking about fire hardening as part of the listing. You know, hey, let's get this listing. Let's get the fire hardening report. Let's make sure we have this piece of paper showing that as part of an open house, that this house is fire hardened, and let's get this into a program where we can sell this house. Because again, it doesn't do any good to list. It only does good when you close for that consumer, and that gets all of us in a better shape, is what I would say.
Yeah, it's interesting because on some properties, like I might have one coming up, and I'm already working on getting insurance quotes ahead of time.
Yeah, that's a problem though. Let me stop you there. As a wholesaler, you are going to have problems if you do that right now, trying to get quotes on insurance. As a general rule, that affects capacity of insurance companies, because when you do it, so what you really want to do is there's a 17 contingency. I change it and say it depends on the size of the house, but if we can get it into a program that's transferable, that's why we created the transferability, is to make it transferable. That's doing the same thing. Now, those are on larger houses, and at this point, we're trying to get one of our companies, American Western, that does the $4 million or less to do it, but that's going to be the really next-gen thing. I would tell you that you're much more important to have a fire hardening report and going through and getting the 0 to 5 cleared out and making sure the vents are certified that they did it, and having potential gutter guards and having all the 5 to 30 and getting rid of the eucalyptus, palm, or cypress trees and all these things. That's more important than getting an insurance quote, because when insurance companies go out, doesn't matter if they see 4 palm trees or eucalyptus trees within 30 feet of the house, they're going to go, not interested.
Yeah.
And then that's a problem.
So how are you addressing some of these uninsurable properties? Because we are really getting to that point.
The fire hardening is really
what it is.
It's really what it is, because we have a great company called Stand that we represent that is writing homes. Their minimum is $2 million on coverage. They will write extreme fire, and even in the extreme fire zones, they're going to write potentially. Well, a lot of it depends on the fire hardening. If the house has got all this, that's that same fire hardening, that mitigation report we're talking about.
Yeah.
That's the greatest, and I'm sorry it's expensive, it's the greatest $1,000 to $1,500 you will ever spend as a consumer that's listing your house. You need to have it, and it's not just from anybody. There's a lot of companies out there that are trying to say they have fire hardening reports. Just saying it, Rick, you know this, how to get a hold of me. Please, everybody, if you're going to go down this road, make sure you talk to Rick so we can help you, and Rick will come to me on this so we can get you the right spots. Because if you go to somebody and they charge you $500, it might not include all the things that the insurance company's like, we're going to need for as a wholesaling situation with our carriers. And if it's not set right, you're going to spend $500, and guess what? You're now spending $1,500 more. There's no reason to do that.
Yeah. So let's say like you're thinking about selling your house. So you're in a high fire area.
Yep.
They reach out and say, look, Rick, what should we do? We say, hey, let's talk to Robert to figure out what to do about the insurance component, because it's going to come up, because lenders require insurance. Like you can't dance around it. Like you have to do it head on. Just like on a lot of my listings, I do pre-home inspections to take the wind out of their sails for renegotiation. Look, the house is what the house is.
I think, and this is just a personal, again, if I was your lieutenant, and I'm going to pick on the buyer's agents of the world. I know you're a buyer's agent at times. Yeah. Man, I would want this thing buttoned up, meaning I would want the fire hardening report with the consumer already doing all the changes necessary, getting everything fire hardened. And then that way, if we can get them into a fully transferable policy, make it so that when you go into escrow, it's not even, hey, I would make a joke and say, we don't get 17 days for those that are out there. I'm not in your world, but I've been told the standard car contract, California Association of Realtors, is 17-day insurance contingency. I have agents now that are getting their houses, especially the larger ones, into these programs. They give 4. Do you know why they give a 4-day contingency? Because before they enter escrow, we already have them into a fully transferable policy, so we can disclose to the buyer's agent, all we need is the information to confirm it's transferable. You need 4 days. If we know the price is X, why is there's no reason. I speak for the California Association of Realtors. I'm lucky enough to speak again this year at Reimagine, which is going to be September 17th for all the real estate professionals. I don't know if you're going, Rick, but I'll be down there and speaking at their conference on insurance and fire zones and fire hardening. The incoming treasurer, Nikki Copa, is having me come in to speak on this. It's such an important thing because now it's even part of your contract. So now it's either 6 questions or 12. Well, sorry, I was part of that to push that in. Okay. You know, because it's an important thing to know.
Yeah.
It's an important thing to know.
Yeah. Really what I think that we should be pushing on the real estate side is like on all my listings, we do all the disclosures ahead of time. So as offers come in, we counter.
Thank you. That's Rick. You're going down the road. I'm begging everyone. Every one of your brothers and sisters. I'm begging them to do what you're doing because they don't do it. And what happens is we'll get the 11th hour. Okay. You know, a lot of times calls from agents. Hey, Robert, today's Wednesday and it's 2:00 in the afternoon. Hey, we're trying to close tomorrow by first thing. What can you do? My answer is we can help. We can help, but it's going to take 3 to 5 business days. And we have to talk about fire hardening and all the things. Is this something that you're going to want to do now or it doesn't do any good? Yeah. For the life of me, you don't do this, but for your brothers and sisters that are out there that are real estate professionals that are listening to this, please listen to Rick and what he's doing. He's running these disclosures. We'll probably start even helping you do these fire hardening reports in advance because bottom line is if the house, I don't care if it's perfect street or if it's going to burn street, okay, is the joke. Yeah. You better have a fire hardening report. You just have to have it. If you don't have it, it's a problem.
And to be honest, like I'm probably revealing more than I should, but like on the buy side, I do a lot of negotiations for my buyers. Yep. And it's if you don't give me all the information up front, I don't always ask, and that's intentional because I want the second round of negotiations. Yeah. So take the wind out of my sails and give me everything up front.
Oh, can you imagine? Okay, so let's say I'm not in insurance, but I'm a realtor and I'm going up against you, and I have the full fire hardening report showing and all the inspections that you run. Yeah. And I give you all the information, including the fire hardening report, showing that it's been completely done. Everything's fire hardened in insurance, which is like a doctoral level, not the fire department, which is like entry level, freshman level. Okay. And we did all these things. What did I do to you, Rick? How are you negotiating against me? Yeah. I've got everything done. There's no round of negotiation. As a matter of fact, if you're representing a buyer, I would recommend getting the fire hardening report because guess what? Now it's a disclosure issue for the buyer's agent. Our seller's agent.
That's usually how we take the wind out of their sails. Look, there's all these issues with the property. Even if you cancel on us, you still have to give it to the next buyer. Even if you take it off the market, the problem doesn't go away.
It's not like all of a sudden you're going to look up and say, hey, 6 months from now, I'm going to list it again. You have a fire hardening report that says you didn't do all the things you needed to do. Yeah. Yep. And it's things like this. It's water shutoff valves that are like the Moen water shutoff valves, and it's earthquake shutoff valves, which are now, I think, standard. You have to do that as part of a transaction. It's as stupid as it sounds. For the washer and dryers, for when you move into your house, having they're $10 to $12. Okay, the crazy thing, having the stainless steel threaded lines versus our standard rubber line. These are all things that are these are things that insurance companies are looking for, and that's what I educate all the time. I'm lucky to speak in different community events. I speak in London to the insurance companies. I always say I'm the biggest middleman in the history of the earth now. I'm bringing capacity into California and fixing the insurance problems, helping over 3,000 insurance brokers, but I still work with consumers. So, Rick, if you have a client that's got a problem, we're going to talk to them. It's for those OCD ones that want to hear from the horse's mouth.
Oh, for sure. Yeah, because it's one of the challenges with being a realtor is people view us more as car salesmen rather than experts. Yeah. And it's always that fine line. And that's why you're right. Like, I'm like, look, here's what I'm telling you. Go ahead and talk to this other person. Yep. They're going to tell you the same thing. They go talk, same thing. It's just, it is what it is. Look,
it is. I get it. And this is the direction the industry is going. So what my joke is, not even state law that's already a given. Yeah. It's also the insurance industry is going this way. It's like I make a joke about the transferability, which is a really big deal. Yeah. Sellers to buyers. I think in 3 or 4, maybe 5 years from now, someone's going to look at this podcast and go, what the hell is Robert and Rick talking about? All policies have the ability to be fully transferred. Okay. I just think that's part of the game. Okay. And so it's like fire hardening is the same thing. Having a fire hardening report is going to be standardized just like any other inspection report that you have. If you have houses have chimneys, you're paying a chimney inspector. How much does a chimney inspection cost?
Like $400.
Got it. So how much does, if you have a pool, what is a pool inspection doing all the leak detection and things like that? These are all the things. Okay, $1,000 to $1,500 it sounds like a lot of money, but it really isn't when you think about the grand scheme of things. If you're a seller, you better have it, because if not, the buyer's agents such as you are going to get slick on them, run these reports and hammer them with it.
Yeah. I think part of the challenge I've been hearing is, using the Palisades and Altadena as the easiest example, is some sellers like, why am I going to rebuild if it's going to catch on fire again? Or why am I going to move to this area? I can go to Pacific Palisades, or I could actually go to Westwood, or I can go to some and just drive down the street. So you're going to have to do certain things.
Like, yes, exactly.
So I think that there's going to be a marketing angle on this.
We work with a company called Mighty Firebreakers. They're incredible. They build defense systems for houses. When you do the fire hardening in combination with those, so let's say, for example, you looked at me and said, Robert, we're in a high fire zone area, and I want to be fireproof. I would go, okay, here's your fire hardening. Here's all your things. Here's a company that actually does Mighty Firebreakers, which is incredible. If anyone out there is listening, I can easily, no affiliation. We partner with them to basically save. We don't get paid when I use partnering. We're referring to them because they're the only ones that have a chemical that's EPA friendly. So you don't have to worry about kids and dogs and plants with their stuff. You don't have to, it's a whole host of reasons. But that's also on the higher end homes. What you're seeing is a given now. Because the insurance companies want to, so let's say, for example, and insurance companies look at things as total insurance value, Rick. They do, right? What's the total insurance value? They don't care what the rebuild cost is. They want to know is, what's the total dollars? If the house burns to the ground, what is the check? What am I writing for a check? If it's $10 million, we're seeing 2 to 3% rates. That's $200,000 to $300,000 in costs. Because now we might be able to drive that down to $60,000 or $70,000. Yeah. Talk about a world of a difference by putting a simple system on there and doing some fire hardening. The bigger the house is, the staggering the differences in numbers. When you're a 3,000 square foot house, it's not a lot of people go, I have this company right now and they don't require us to do it. Sounds great. I'm good with it. I'm happy for you. By the way, every company is going down this road. Didn't happen this year. You're probably going to get hit for it next year. They're going to cancel you, or they're going to hit you up on this. We'll see you next year is the joke. Right, is the thing, or maybe 2 years from now. This is what's going on, and we do it a ton.
Yeah, I'd imagine, because again, buyers are getting savvier, and if it's not buyers, honestly, it could be their business managers.
Yep. And again, Rick, I tell you, I've been through every fire, 27 years doing this. Right, I'm on the scene. So I was on the scene within 3 days of the fire breaking out in the Palisades. While things were still going, I have contacts next year. I was up there doing things and trying to help people secure and do what's called securing their total losses and things. Cal Fire did, by the way, an incredible job. There was a huge upgrade with this fire where they were showing pictures of every house and certifying total losses, which was exponentially better. But anyway, that's my shout out for Cal Fire doing a great job. They always do. But with that being said, I make a comment and I say this, it doesn't matter how incredible the insurance is. I'm just going to say this. If God forbid right now we're on this podcast and I've got a friend of mine that gave me a Georgia Bulldog shirt because he's a big fan of, and you and I are having a drink somewhere or we're having lunch and our house is burned to the ground. This is the only shirt I own. I don't have a pillow to put my head on tonight. I don't have a plate and a fork to put food on. Hell, I don't even have anything to cook on. And people don't realize that when you lose your house, you lose everything. You lose pictures, you lose memorabilia. If you have kids, you're going to lose your child's first shoes and all the things that are sacred to you, you're never going to get back. And so why I look at a lot of consumers and say, why do we help get everybody fire hardened? And why are we even helping people get fire systems to defend homes? Because it doesn't matter how great the insurance is. It really doesn't. It's spectacular in what we do. You're not going to be whole. You're just not.
You never will be. Emotionally, whatever.
Emotionally, you're not. And anybody that's been through a fire will be the first to tell you.
Yeah, no. And that's what I've been hearing. I've been hearing a lot of those stories, especially because some of these neighborhoods are so community focused.
I was on a podcast for AM Best, and I was on for Bloomberg. I forget which one. It was towards the end of last year. And I was asked a question about what areas am I concerned with across California. And I was naming a few, and the Palisades was one of them. Because I was talking about proximity of risk and stacking and all the problems. Okay. This problem isn't going away. I will tell everybody out there right now, we are
Yeah.
getting better as a state. We are getting better. People are fire hardening and doing things, but we have a long way to go.
Yeah.
We have a long way to go.
Yeah. So this is kind of a two-parter. It's not just insurance, but it's also protect the home.
Have to and protect communities.
Yeah.
You're going to companies like Fire Break spray in San Diego. They're spraying a lot of the municipal areas.
Mm-hmm.
Do you know that, as an example, their EPA friendly one basically removed? They had fires in 2023 and 2024. They started spraying this year. They have yet to have a fire in these areas because it burns all the way up to that point and stops. They had homeless camps where things were, you could see the tent burn, okay, the homeless camp, but nothing burning around it. This is the kind of things that I believe are the major changes that are going to be, we're going to have to talk about from a community standpoint. And then how do you start first? So people go, it's the old elephant joke. How do you eat an elephant? It's one bite at a time, right?
Yeah.
So how do you start it? You start it with fire hardening, and you start doing mitigation, and you start starting the home thing. Then you can get into community situations, right? If you have enough people in the community doing the fire hardening, then you can look at how do we do things that, can do that same thing, but bake it on a community basis. It might be for areas, loss assessing $200 to have a company come in and spray the areas and defend the areas to further take out the fuel lines and things of that nature. I don't know.
Yeah, and they may have to, because if you take Altadena as an example, a lot of people, it's multi-generational.
Yep.
Oh, this is my grandfather's house. They're blue collar workers. It wasn't like they had the money to do all this fire hardening.
Yep, it's exactly it. And what's happening is in these communities, it's like, I think a lot of times, without getting political, if it doesn't matter what side of the aisle you're on, this is the things. If I were in California, I go, look, we need to change. Yeah. We need to change. How do we change? We need to change things. We have to push things back. We need to make sure we start doing clearing. We have to do a lot more things. Hey, we could have fun. You and I see it in Westlake Village. They have the goats that come out and clear areas. Yeah. The goats eat up everything. Hey, you want to do goats, man? Hey, let's get 28,000 goat farms. Let's do everything we can do to start clearing these things out, because, again, whether it's control burns or goats or whatever, taking the fuel lines out, that's what nailed the Palisades fire. Altadena fire burned in an area that wasn't anywhere near homes, but the wind was so extreme, it blew it into the areas, and the houses got picked off. Okay? We have to make change, and we have to defend. And that's a big difference.
No, I agree. Robert, thank you so much for coming on. What are some
thank you.
Last words, thoughts, whatever, that people really should be listening to?
Obviously, I'm sorry I keep beating a dead horse to it. Again, fire hardening is 100% what it needs to be. If I were everyone out there listening right now, if I can say to anybody, is updating. Some of them are really simple. A 16th-inch mesh, you go on to Amazon and order a roll for $50. Yeah. Go there and with a stapler, staple around the inside in your attic. Now, some people are not able to do it. You can hire a handyman or something of the nature that does that. I'm just telling you that these are very simple fixes that exponentially change. And a lot of people, most people out there have gardeners and things. Take a PVC pipe, measure 5 feet, put a cap on it, walk around your house, and see what's inside that 5 feet. These are things that we just all exponentially help you change. It just does. Whether you get a fire hardening report or not, you can definitely do it. Again, thank you for letting me come on today. My name is Robert Feldman. I'm the CEO and co-founder of Wiles Insurance. If anyone wants to get a hold of me, it's real simple. I answer. I helped somewhere between 300 to 500 families that weren't even clients during the fires, that were helping them process. This is what we do. We have over 3,000 insurance brokers appointed with us. We're affecting change, but my email is really simple. It's Robert, and it's the @ WOWS insurance.com. So Robert @ wowsinsurance.com. Rick, people forget the S is the only thing I would say. That's why I spell it out for everybody.
Yep, okay? Totally get it. Good call.
Yep, it's always a good thing. Always great.
Robert, thank you so much for coming on.
Absolutely. There's always different subjects, Rick. I'd love to come back on. If we want to do one on Cal Fair Plan, we could talk about one just in great length. If you want to do a series of them, I have a lot of great agents like you that are looking at doing series to get information and content. I think it's a great thing. I can't thank you enough for doing this, because every time someone as great as you are that does this, it just gets information out. If we can help, if we can fix one person, 5 people, it's worth it to me. It just really is.
No, I get it. Yep. It's a team effort.
It's a crusade. I say I'm ADHD. I don't ever shut down. I'm OCD neurotic about being perfect. It's a good thing to help fix it and make a change. Is what I can say.
Very
Yep.
good. All right. Well, thank you so much. And thank you everyone for watching. Thanks for tuning in to The Key to the City of Angels. I hope you found today's episode helpful as you navigate the world of Los Angeles real estate. Whether you're looking to buy your first home, expand your investment portfolio, or sell in this competitive market, I'm here to help you succeed. Let's connect. Visit my website or follow me on social media to learn more about how I can help you achieve your real estate goals. And if you're ready to take the next step, don't hesitate to reach out. I'd love to work with you. If you've enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who might benefit. Together, let's unlock your potential and make your real estate dreams a reality.